There he is. Yes.
20-year mortgage professional.
There he is, Kevin Sherba.
In the house.
How are you doing today?
Doing all right, man. How you doing?
I'm doing fabulous, amazing.
Nice.
You know, I'm a little tired because I got up really early to just, handle some shit.
Oh, yeah? You do seem like you're, working on like one hour sleep.
Yeah, I didn't sleep. No, not at all. I had to reset my whole schedule because I realized that as soon as the summer hit,
right,
I
threw all your goals out the window and started partying.
Yeah. But my routine changed because the kids are no longer in school.
Oh, okay.
So it's like a different vibe at the house now.
Right.
Like before, it was like, go, we gotta go, you know what I mean?
Like, and now it's like, I don't need to do anything.
Now it's like, let's just watch the whole Matrix series.
Did you watch it this weekend?
Yes.
Nice.
I've been watching Matrix. I've been watching all.
What was that one that I just watched? It's Keanu Reeves too. It's what's it called? He's like shooting the whole time.
Oh, John Wick.
John Wick. I watched all of those.
Yeah.
Yeah.
What is it on?
I think is it Netflix or Hulu? One of the two.
Because that might be our next marathon.
Yeah, dude. It was a little much, but I went for it. I did all 3 movies one weekend.
Yeah.
Yeah.
Yeah. Yeah, I've been watching all kinds of stuff.
I mean, I wish that we had more transactions, so I couldn't do that, but we'll get there.
Yeah. I got a new lead today, so.
Did you?
We'll see.
Nice. Where'd you get it?
We'll see. It was
like where'd you get it from? I guess
it was like a voicemail.
Just a random voicemail?
No, it was a voicemail from another lender.
Oh yeah.
Yeah.
They said, do you have time to show this buyer some homes?
No, it was like a I mean, like the buyer went to the lender.
Mm-hmm.
Mind you, I don't have any more of my contacts.
Right.
Like starting from scratch.
Right.
Right. So the buyer went to the lender, and then the buyer said I was his realtor.
Right.
He doesn't have any more contact. He doesn't know how to get a hold of me.
Okay.
So the lender was tracking me down, trying to find me.
Oh, okay.
And then I checked my voicemail.
Did you already show him a house before?
No,
is that way?
I
Oh, okay.
No, I haven't.
Cool, man.
Yeah, and then I came. So, yeah, I got some in the pipeline.
Good shit, man.
I got some mortgage people for you too.
Oh yeah.
Yeah, we just gotta.
Mortgage people meaning what? Clients or people that want to do mortgages?
No, clients.
Oh, okay.
I got some clients.
Because you could always hit people up like if they're unhappy at their job. We got room over here.
Oh, does that?
And they could do awesome loans like we do.
Oh, is that
rather
a thing?
than being stuck, we're doing what they're doing.
Is that a thing?
That's the thing.
Really?
Yeah. So if you run into loan officers, just ask them, "Hey, you happy where you're at?"
Oh.
And then I can have a conversation with them.
Dang.
So they can do 18-day closes on FHA loans like we did. We could have went even faster, man. We could have went even faster. But yeah. So we got somebody into their house this last weekend, right? On Friday?
Yes.
So it was an interesting, transaction. How it started, a little bumpy.
Yeah.
But we pulled it off.
You know what, Kevin? You did an amazing job.
Thanks, man.
Man, I keep pressing the wrong button. I'll hit
Vegaslife
there you go.
Radio.
Hey, just stick to that soundboard. You know where the buttons are at.
Yeah. And then one thing I learned with that process is that we are here to help.
Right.
Like, don't be afraid to divulge pertinent information
to
us.
The more the merrier. The better it is. The more you give us.
Yeah.
With this last client, I think we might have talked about it on a previous show, but he had some issues that were detrimental to him qualifying.
Yeah.
In the beginning, we didn't know about it until we missed out on that first house. Right.
Yeah.
Because it was like a time frame thing, and it was last minute. He was like, "Oh, what about this?" And it was like a huge income difference.
Yeah.
And it killed our chances for that home.
Right.
Thankfully, he was able to find something better that he liked better.
Yeah. I think
cheaper,
better,
right?
Cheaper, yeah.
And more affordable for him, and we were able to get it done in 18 days on an FHA loan with an appraisal. So I mean,
that's a beautiful thing,
right? So yeah, we went through all the speed bumps and got it done.
So, what would you say the key to your success as far as like moving so efficiently? Like, Like, what's the?
I think it might just have to do with like how long I've been in the business, but also
20-year mortgage professional.
But also assuming that we're going to have problems.
Okay.
Right. So I never assume that the loan's going to go smooth. I'm waiting for something to happen wrong. Right.
Right.
And that's why the stuff that I have control over, I try and get done like right away. Right.
Okay.
And then that way I have time. If something goes wrong and it takes a couple days here or there, like I have I always give myself an extra buffer of time.
Yeah.
With getting everything out of the way that I have control over and that the borrower has control over right away. And then if the underwriter hits us with, well, what's this or what's that, then we have a couple days to take care of it.
Okay.
If we have to.
Okay.
Right.
Cool. And then there was a new product that came to my attention, and we never got a chance to speak on it on the podcast. The home assistance.
Oh, zero
down.
Zero down product.
Zero down product. That's a new product, right?
There've been down payment assistance that allow for 0% out of for down payment. Some of them do require that you put a little bit in. So down payment assistance not created equal. They're all different products, but right now we do have a product that's 0% down. And if you have a score above 700, then there's no limitation for income. There's no income cap.
Okay.
If you're under 700, then it's 85% of the median income.
Okay.
You have to be under that as far as household income to qualify.
Okay.
But it gets you up to $15,000 to cover either the 3%. It's a conventional program. The 3% that you would put as a normal first-time home buyer.
Oh wow. Okay. So.
Right.
If someone has a 700 and above
credit score, right,
they can qualify for this
for the $15,000, right?
Oh.
To pay their down payment.
Wow. So is there any other stipulations too?
It's the 700 credit score, 15,000. If you assume that you're going to have a 3%, right? A 3% down payment, you only get up to 15,000, right? So. Okay. If you do the backwards math on that.
So yeah, what's the highest?
I mean, I should know that by heart, but
okay.
I like to be accurate.
Yes, let's go. This is really important too because.
So 15,000 divided by 0.03%, right? Is a 500. So up to a $500,000 loan.
Wow.
The $15,000. So $500,000. Your 3% down payment would be that $15,000.
Oh wow.
Of course, you still have to have money for down payment, or closing costs.
Estimate how much would they have to have for
a $500,000 loan? I mean, I'd estimate anywhere between $5,000 and $7,000, and that's not just fees. Everybody's like, "Oh, that's expensive. Why are you charging so much money?" It's title fees, transfer taxes, starting an escrow account so that you can, the lender can pay your tax and insurance. There's a lot of prepaid expenses that go into that estimate of that total. But first year's insurance. Maybe there's a tax installment that's due. Right. Clark County, taxes, stuff like that. And then of course you have your underwriting and processing fee. And if you decide you want to buy the rate down, that's additional on top of that. So.
So what about
Now I think that this product, definitely reach out to us. 702-832-5704 is my direct line. Or you can get me on my cell phone, 916-541-4295. But I think with this product, the 15,000 is, I think you can use it for closing costs too. Let's say you buy something for 300. Oh. And they're going to give you up to 15,000. I believe you can use it for closing costs.
Wow. So
that's something that I would need to verify.
Okay.
If you're interested in the product, give me a call and I'll verify it for you. Everyone's scenario is different.
Right.
What kind of house they're buying? Is it a condo? Is it single family? What's their credit score, like we talked about with the income limits.
Right.
And then what do they have? Do they have zero money? If they have zero money, then, we have to make it fit. And maybe we get closing cost credits from the seller.
Okay.
Right?
Okay.
So let's say someone buys a $500,000 house, and instead of, hey, I don't have the $5,000 or $7,000 in closing costs. I'm going to get the down payment assistance, do a 0%, but I still, I can't pay for the closing costs because I don't have any money saved.
Right.
In that case, we could do a seller concession, right?
Yep.
You could offer $500,000 list price and ask for that $7,000 back.
Oh, nice. Yeah.
To cover the costs, and then it's a truly zero down loan, zero closing cost loan.
See, information is key.
Right.
Does the closing cost change with the price of the house?
Yes.
Okay.
So some of it's percentage wise, right? So like title insurance, it's a percentage of the loan amount. The lender's title policy changes depending on that. Taxes, of course, if the house is more expensive, the tax rate's going to be higher. Transfer taxes, some people have HOAs, so that's going to be different. So a lot of stuff is property specific and then purchase price specific, and then credit scores.
Okay. But the main thing is just credit score, right? As long as they have a good credit score, they can.
Yeah, I mean, well, it's credit and income, right? So if we do the down payment assistance, we usually talk about the three things that matter, right? Credit, income, and the assets, right? The assets, right, If they're in a situation where they don't have any assets, then we use a down payment assistance, and the only thing that matters is credit and income.
Okay. So they do have to,
and a seller willing to pay the closing cost for them.
Right. And so they do have to have the 2 years or the income verification stuff and stuff like that.
Yeah, it's not stated.
Yeah,
it's still, they still have to qualify.
Wow,
that's something that we worry about for them.
Right.
And the sooner they talk to me, the better. Before you even get into escrow, right? It's better to get in front of that and make sure that we have all that figured out before we put them out on the market.
That's big, man. That's big. I'm gonna promote the hell out of that. I really am. I'm really gonna go crazy because we didn't have a chance to really sit down and kind of
talk about the differences.
So
it's a situation where a lot of times, we go out, we tell them, hey, we have down payment assistance, and people like that. They think, okay, hey, I can get some, I can get help to buy a home, because that's sometimes that's their scariest thing. Maybe they have the $15,000, but that's all they have,
right? And
they don't want to use it. They're scared to use all their money and buy a home, and then not have anything in savings, which is understandable. And so even if you have money and you don't want to use it, we can look at down payment assistance and weigh the options. Sometimes people will call in and they want the down payment assistance, right? And then we price it up for them and say, okay, well, here's the loan with down payment assistance, and here's the loan without. And they're like, well, I like the terms without, but I don't have any money. And then the next thing is, okay, well, do you have family members that are willing to help you? We can look at a gift, right?
Okay.
So you can get gifted your down payment from a family member, right? Let's say mom or dad's, willing to help, and they want to give you the $15,000 for the down payment, and then the seller is willing to help, and they want to give you the money for the closing costs. Then now you have a loan with nothing down out of your pocket, without the down payment assistance, at the terms that are slightly better, because you're not using down payment assistance.
So if you use the down payment assistance, the terms aren't going to be
they're not as good. They're still good. It's not some down payment assistance affects the first mortgage rate a lot more than this new product that we have. But that's why we look at all the options. Even if someone calls in and say, hey, I really want that down payment assistance, you know me, I'm not gonna give them one option. I'm gonna say, okay, cool. Here's what that looks like. Oh, I don't like that. Well, here's why I'm going to show you 4 other different ways to do it. Right.
Yeah.
One of those might even be waiting.
Yeah.
And I don't mind doing that for people.
Right. Exactly.
If they're not comfortable with what it looks like, we don't mind getting them on a plan and maybe waiting 3 to 6 months or 9 months or 12 months or whatever.
Right. Absolutely. And then so another big factor of that is the credit score, right?
Right.
And then for the people that want to fix their credit score, you could help with that as well, right?
Correct. And that's why it's important that they get a hold of me before they're ready to buy.
Yeah, absolutely.
Because, or if they don't even know if they're ready to buy. I mean, someone who says, well, I haven't even thought about it. Cool, call me so I can tell you what it looks like. And get it into your mind of this is how I get to home ownership. A lot of people, like we talked about before, they've never even thought about it.
Exactly.
It's either overwhelming for them, or they don't think anybody's willing to sit there and explain it to them. Or they feel stupid or whatever. Don't ever feel that way.
That's
like
the biggest thing.
Yeah. Don't be embarrassed about credit issues. I've been doing this like we always talk about for 20 years. Believe me, you're not the only one with credit issues.
Everyone has credit issues, man.
Or if you just don't even know how credit works.
Exactly.
There's a whole lot of people, a bunch of people out there that just don't understand it, and so that's something I can help them with too. Building credit. I've had clients where they have bad credit, and I help them to fix it, give them the steps, do that what if scenario, do the soft pull, and take a look at, okay, here's where you're at now, here's where you need to be, and here's how you get there. Or they call and they say, I've never even used credit. I don't even have a credit score. And we tell them how to build credit. In 3 months, even sooner in some instances. Like here's a tip for credit, building credit. Let's say you have someone who's never used credit, and their parents have good credit, right? You can add them. Their parents can add them onto their accounts, onto their 2 or 3 credit cards that they've had forever.
Yeah.
And automatically they get it like a 700, 800 credit score. If that's how their parents, like let's say their parents have had credit cards for 10 years and they've always had good credit. Just you add those on the account. The next month, it shows like those are the clients' accounts, and now they have all their parents' credit history, helping them with an awesome credit score.
Wow,
so
that's a good tip.
I mean that's something that I was fortunate enough when I was younger. That's how I got my credit started. It was a little scary actually. Give you a little side story is when I was younger, I wanted to get my credit going, and it was my older brother told me, well, I'll add you to a couple of my accounts, have your dad add you to a couple of his accounts. We both have good credit, and we're not going to give you the card because I was too young. I probably spend money.
Right, exactly. So
they're like, we're not going to give you the card, but we'll add it to your credit report, right?
Yeah.
I started getting offers from my bank to open credit after that happened.
Oh wow, yeah.
My first credit card was a $15,000 limit. And I was 18 years old.
Oh wow, that's dangerous.
And so it was dangerous. And so, but it was because they thought I had all this great credit because I was added to my brother and my dad's accounts.
Yeah.
So it's a way to instantly get a credit score. So we have all the tips. Like I said, I've been helping people with credit for years. I'm not a credit repair person or a credit person, but
so are we allowed to advertise like free credit repair?
No,
we're not. We can't be like
we can't say that we're credit repair
or not credit repairs, but like we can repair.
You can't say repair. You can say credit review.
Credit review.
Right, we can review your credit and
fix your credit. No?
Give you steps to fix your credit. We're not fixing their credit, so that's the difference. A credit repair company has a license to be credit repair.
Okay.
And so they charge a fee.
Right.
To actually do the work for the client.
Okay.
What I do is I show them how to do it themselves for free.
Can we say free credit consulting?
I don't even know if that's okay.
Oh, really?
Yeah, with financial stuff, it's very. Oh, wow. You got to stay in your own lane.
No, yeah.
All I can say is that I can look at your credit, and we have a what if simulator that I can tell you if you do X, Y, Z, this is what your score will do.
What if we just get? Wait, how much does it take to get to the credit certificate and stuff?
What do you mean?
To do credit.
I don't know. I've never looked into it.
Yeah. Because I see people like other realtors, they like promote they got free credit repair.
Right.
So I don't know.
And that might be like for instance, if you said that.
I could say that.
And then you sent them to me.
So I could do that.
Yeah, you could say I got a guy that could help you with your credit.
So I could be like, hey.
Yeah, and if you have a credit repair guy too, right? You can say, hey, I have a. You can't say free credit repair because if you send him to the credit repair guy, they're going to charge him a fee, right?
Right.
So you got to be careful what you're saying.
Well, if I'm sending to you, then it's free.
Well, but I'm not going to repair their credit. So you could say, free credit review, and he'll tell you how to repair your credit. Something like that.
Okay.
You got to kind of skate around it because we can't say we're credit repair.
Yeah. I'm trying to figure out how to skate around it, bro. I'm trying to figure out like free credit review.
Yeah, that'd be fine. Say my lender can do a free credit report review for you on a soft pull and tell you how to fix it if you need to increase your score. You got to be more detailed about what we're actually doing because that way no one thinks that we're charging for. I'm not going to charge anybody for credit repair because I can't.
Right, exactly.
Right.
But you're not actually repairing the credit. You're just telling them.
Correct. So that's why you can't say I got a guy that will repair your credit because I'm not repairing it. Okay. I'm telling them how to do it. Or telling them what they could do.
Yeah.
Giving them basically it's free credit advice is what
free credit advice.
Free credit advice. That would be the way to say it.
So we could say that, right?
Yes.
Free credit advice.
You could say yes. My lender will give free credit advice on how to improve your score.
That sounds
cool.
Legit.
Put it on social, man. Get it on there, Chris.
Free credit advice.
There you go.
Let's get your credit up.
Yep.
0 down payment assistance. There's no reason for you not to go and get a house.
Well, at least look into it.
Yeah, there's no reason. Come on, man. All these products, it's a beautiful thing, man. It's a beautiful thing. Okay, so mortgage update.
Mortgage rate update?
Yes.
Rates are actually getting better right now. It's good that you brought that up. So we've seen the bond market improve this last week quite a bit.
Okay.
It's been on a downhill slide. I'm pulling it up right now. Nice. I think it's been like maybe since last Thursday. we've been seeing reports that are helping. So negative reports for employment.
Yeah.
Anything that's negative as far as like people, like unemployment going up, or people hiring less people, like less new jobs being added.
Right.
That's going to be positive for mortgage rates, because the reason why mortgage rates are high is because we're fighting inflation. And if people aren't getting as many jobs, or they're not getting back into the workforce, then it shows the economy is deflating. And so that's positive for mortgage rates. So that's what we've been seeing the last since last Thursday is every economic piece that's come out has been positive for reducing inflation, which is positive for reducing mortgage rates.
And then they come out with the rates tomorrow, right? Or like what was the thing that comes out on Wednesday? There's a
well, sometimes depending on the time of the month, you have the Fed meeting.
The Fed meeting, right? Yeah.
And I should know when that next one is. Let's see, when's the next Fed meeting? I should know these things, but let's see here. All right, so what's today?
Today is Tuesday, June 4th.
All right, let's look.
Let's take a gander. This is very interesting here.
13th and 14th. Oh, is that the minutes? Let's see here.
The 13th and 14th. Wait, like so a couple weeks?
Yep.
A couple weeks?
Yep.
All right.
So in a couple weeks we'll know.
What about
they've been talking about raising interest rates again. So before Thursday, everything was doom and gloom. So a week ago, rates were going up.
Yeah.
Quite a bit. So it's very volatile right now. Basically everything was looking like inflation is not going away. The Fed's going to have to come in and raise rates again. And then so basically the investors that buy up mortgage-backed securities and bonds, which is what kind of drives the direction of mortgage rates, has been very, very volatile. So each thing that comes out, they're looking at, okay, does that mean more inflation or less inflation? Does that mean the Fed's going to cut rates or raise them? So as reports come out, like we're seeing these big, huge jumps and hills and valleys with the rates.
Do like headlines affect it? Like shocking headlines affect it?
Right.
So what about the recent headlines with good old Trumper?
Good old Trumper. like as far as what won, he has so many headlines all the time.
Exactly. So there's a correlation between his headlines and
sometimes.
Yeah. How about the recent one?
When it gets closer to the election, it's going to really jostle markets depending on whether Biden or Trump. The jury's still out whether a Trump presidency is going to be positive or negative for inflation. If Trump being president would be a situation where we probably have permanent tax. The permanent tax. I guess we got batteries exhausted, bro.
Oh,
I'm off the air now.
No.
They can still hear me. They just can't see me.
Oh my gosh.
It's all right. We got an extra battery somewhere in that bag. But anyway, I'll talk through it. So if Trump is seen as negative for inflation, then we'll have a situation where the rates will go up. But if he's seen as somebody who's going to help inflation on the supply side, then we should see it go down.
What happened last time?
The last time he got elected?
Yeah.
We saw the stock market jump really high because he was pro-business.
Absolutely.
Yeah, pro-business means higher stock prices. And then he cut taxes. And cutting taxes means it stimulates the economy even further. I mean, I think when he got into office, the Dow Industrial was at like 15,000, and it had been at 15,000 for years under Obama. And then it jumped up to 20, and, now we're at almost 40. So this camera angle is pretty weird, man.
Is it? It's got the little loop-de-loop on it. Or not the loop, the angle. The angle on it.
Are we good?
Is that looking good?
Yeah, I can see myself on my camera again, I think.
All right, well, I gotta pull it up on here. Okay, so this might be off topic, but as I said earlier, I was watching a lot of movies. What was that one movie about 2008 that you guys were talking about?
Oh, let me think here.
It wasn't The Big Short. It was something else, and I had forgot it.
Oh yeah, Danny had told us about it, right?
Yeah.
What was it?
I told you, I'm in summer mode. I'm watching.
So you're like, I gotta watch it.
Yeah, absolutely.
The Big Short. What movies? I'm just gonna Google it for you, man.
As you should.
About the 2008 financial crisis. All right, let me see here. Margin Call?
No, it wasn't that
No.
one. It wasn't that
Too Big to Fail.
one. Too Big to Fail.
That was the one.
Is that on Paramount Plus?
I don't know.
Because I got Paramount Plus.
Too Big to Fail. Paramount Plus.
Is it?
Let's see here.
Because I just signed up for it, and I'll tell you why I signed up for it.
No, it's only on HBO.
It's HBO. Damn, I have to sign up for that too. Dang.
Just get all of them, man, and then you won't have any problems.
You want me to tell you why I signed up for Paramount Plus?
Why?
Because the movie I Love You Man was on there.
Oh, yeah. You sign up this weekend?
I sure did. I really wanted to watch the movie.
Yeah.
It's about real estate.
Right.
Well, it's a rom-com. I love rom-coms.
Right.
And it's about real estate.
Nice.
So I was like,
So yeah, so you just sign up for it and then cancel it.
Yeah.
And did they give you a free 30-day?
Yeah, they usually give you like a 7-day. They usually give you like a 7-day trial. Usually.
Right.
Is it worth it? Is it worth it that much though?
I don't know, how much is it?
I don't know.
You didn't even know the price.
I don't know. It's probably a few bucks, man.
Probably like $10-15 a month.
Something like that.
I mean, shit. You think about like how these streaming services, they get expensive. Like if you do live TV.
Yeah.
Like I have, I went from satellite to YouTube TV.
Yeah, absolutely.
And I love it.
Yeah, absolutely.
It's way cheaper.
There's no reason.
I was like paying like, I don't know, $250 for DirecTV for years. Yeah. And then I was like, I don't even watch it that much.
Exactly. It's only good for like sports.
Right. And YouTube TV has all the sports.
Exactly.
Like all of it.
Yeah, I was on the Hulu Live TV too. I was on that. And you could you watch it on your device.
Right, wherever you go.
You know what I mean? You can't take your satellite thing with your device.
It's not the same.
It's definitely not the same.
They were so mad though. I said they still call me.
Really?
All the time.
Well,
they're like, hey, what can we do for you? And I was like, can you beat $75 a month? And they're like, well, we could do $175.
Wow.
I'm like, that's not gonna work, man.
What kind of
like?
That's not even.
They're like, how about we cut you a sweet deal at $180? I'm like, what? How's that helping me?
It's like that's not the bottom line, man.
Right.
Like, so what are rates? You never said the rates.
What do you mean? You want me to just tell you basic interest rates?
Yeah.
That's always okay. Let me tell everybody that
I'm the consumer.
That's that's what consumers say.
I'm the consumer.
What's the rate? What's the rate? It depends, right? All right.
Depends on what?
Depends on credit, income. Depends on credit, income, property type. I don't know, a whole bunch of shit. That's the funniest thing. Everybody calls it. Like, what's your interest rate? I'm like, oh, okay, here we go.
Okay.
I've been dealing with that for years. But yeah, so to give you kind of a rough estimate right now, I think we're in the low 7s to high 6s with conventional. If you have perfect credit, 20% down. Mm-hmm. FHA, high 5s, low 6s. Mm-hmm. Perfect credit. Well, not perfect credit, but decent credit, right? 680 plus. Okay. VA, same thing, mid to low 6s.
Okay.
And then, of course, they always have the option to buy the rate down with seller money or out of their own pocket to buy it down. Okay. So that's kind of where rates are at. So we're still in the, average rates are in between 6 and 7 still. Mm-hmm. But they're not pushing 8 like they were just a week ago.
Right.
So, it's come down.
Yeah.
We've been in this range for 2 years.
Yeah.
Between high 6s to low 8s for 2 years now. So I did have a client just today that was, telling me, oh, the rates are high. And I said, well, what do you want them to be?
Right. What do you say?
He said, well, they used to be 1.5%. Well,
1.5%.
They were never 1.5%.
Jeez.
They were like 1.75 at best case scenario.
Yeah.
And that was a government loan. But anyway, I said, okay, fair. Rates were way lower a couple of years back. But what do you want it to be? Knowing that rates are, in the high 6s, low 7s right now, what do you want it to be in order for you to be comfortable getting back into the market? He said, well, 5 would be at least reasonable. I was like, okay, well, I'll take down your information and we'll monitor rates and you can check in with me every couple months. I told them to call me back in 6 months.
Right.
At that time, we'll kind of know where the election is, and
Yeah.
we're going to have a lot of things changing this year.
Absolutely.
Whether or not the Fed's going to cut rates, what inflation's going to do. A lot of things are going to come to the ahead at the end of the year. Whether rates are going to continue to stay where they're at, go up a little bit, or come down.
Right.
So it's kind of a deciding year on what direction we're going in real estate, or at least mortgage rates. But that's what I told them. I said, just check it with me. Here's my contact information. I don't have I'm not going to force you to take a loan you don't want.
Exactly.
And so if you're comfortable at 5%, and you're okay with waiting, and there's no rush for you, then you can wait for 5%.
So when he said 5%, did he have like a monthly payment in mind? Is that the reason
No,
why?
he just has a rate in mind. Some people are so rate fixated, they don't care about anything else.
Because
what's the interest rate?
Yeah, I would imagine what's more important is what your monthly.
Well, and your goals and stuff like that. But some people aren't willing to have that conversation. Like this guy just was like, "What's your rate?" I said, "Well, I want to give you an accurate rate for your scenario. So can I ask you a few questions?" And sometimes they say, "No, just tell me the interest rate." And I'm like, "Okay, well, it's 6%." And they're like, "Okay, that's too high." And I'm like, "Well, I don't even know if you're really qualified for 6%."
Right. Exactly.
Because you'd have to fit this parameter, right?
Yeah.
But if you don't want to have a conversation, I can't really be accurate with you.
Yeah.
You know what I mean? At least I didn't do it like some people do and say, "Oh, we got a 3.5%," which is a total BS lie.
Yeah.
I could give them a 6%. It's going to cost them a couple of points. It's going to be an FHA loan,
like for those type of people, would it be unethical to tell them like the lowest possible rate you could do?
As long as you're telling them, and then you also tell them what it's going to cost them.
Yeah, because with that
a lot of people do that. So the problem with mortgages is, and I've been dealing with it my whole career, is we have a bad rap because a lot of people tell them only the first part.
Right.
And then when they get into escrow and they paid for their appraisal and they get into and they do all this work for the loan and they're getting excited, then the ball drops and they're like, "Well, it's going to cost you an extra $10,000-$15,000 for what I told you." They're like, "Well, you didn't tell me that up front." And then that's a bad loan officer, right? So I'm going to tell them, "Hey, you can customize the rate whatever you want. Here's a 0% rate, like no points. And here's a rate at 1 point. Here's a rate at 2 points. Here's a rate at 3 points. And if that's not good enough, what rate do you want? Okay, well, it's going to cost you 4.5 points. I don't know if a seller's going to be willing to give you all that, but we could try.
Right.
It's up to how they want to structure it.
Oh, so with the case of this past client, he said a rate that was way lower than
5%.
Yeah,
I mean,
it's
off the rate sheet. It's not even on the rate sheet.
Yeah, so
so it's not possible.
Right.
If he was a veteran, it might be possible. Okay. But he's not. And so yeah. So it's just sometimes you just gotta give them the hard truth, and then I don't get nasty with them. It's just if it's not what you want,
right,
then it's not time yet, and we can wait for that, and that's fine.
Yeah.
So that's kind of what I did.
Okay. I was thinking we could promote free pre-qualifications with free credit advice.
Okay. Put it out there, man.
Is that okay?
I think it's doable.
Is that okay?
Yeah.
Like, hey, free pre-qualification with free. Wait, no. I want to say credit advice.
Well, you know what? Here's so you got to cut out the free.
Okay.
I know that's like a word that you want to use because it makes people excited.
It does.
But the problem is that if it's a situation where I have a conversation with someone who's not ready, and I know they're not ready, and know they're not going to qualify.
Okay.
It costs so much right now to get these credit reports that we have them pay for it.
Okay.
So if it's a situation where they're like, "Yeah, if I qualify, I'm ready to go out and buy." But and then I ask them, I say, "What do you think your credit score is? What do you think that you have? Do you have anything that's going to prevent you from buying?" And I'll do that pre-qual conversation like we talked about. Make sure it's going to fit. Yeah. And then I'm willing to pay for a credit report for them because they're willing to be a client right away, right? But someone who needs help and knows that they need credit repair, they're going to have to pay for that soft pull themselves, right?
Yeah.
I think it's $37,
right,
or something like that, for pulling it. They'll get a link from me. They'll fill out the information, authorize it, and order it themselves. And then once I get it, I can do the what if scenario for them, which costs us a little bit of money, but we can't be paying $50
right
for
exactly.
If you say free and then all of a sudden 100 people call, it's gonna be real expensive.
Yeah. So I recently with a client that already had their credit pulled and got qualified for a program. I wanted to refer them to you, and they're worried about you pulling their credit again.
Right. And so that's where that soft pull comes in.
Okay. So that's
I have a lot of clients where we have a company that transfers us live transfers.
Okay.
And these live transfers come from what are called trigger leads.
Okay.
Now, we don't buy trigger leads. We just are a partner with the live transfer company.
Okay.
They buy the trigger leads, and when people get their credit pulled, that's who they're calling to get them on the line. Once they get them on the line, they transfer them to us. We see what we can do. Okay. But I already tell them straight up, because that's how I am.
Yeah.
Hey, the call center is not our company.
Yeah.
You got a call from them because they have a trigger lead that you had been credit pulled for a mortgage. Let's talk about what you're being offered at the company and see if I can help you. And if they are interested and they go, well, I don't want you pulling my credit again. Well, if I can save you a whole bunch of money, then it doesn't matter. Right. It shouldn't matter to pull it again. But in the meantime, if they want to see what we can do on paper, I can work up their entire file and disclose the loan to them with a soft credit report.
And that
does not hit their credit at all.
Okay.
So for instance, your client that has already had a hard inquiry done, that's worried about what their credit score, they don't want it pulled again until they know what I can do for them.
Right.
We can do that by doing a soft pull, work it all up.
Okay.
Say, here's what we can do for you, and then if you like it, then we'll submit the loan, and at some point we will be pulling a hard pull to close the loan.
Okay.
So that's another step that we can do.
Okay.
We've added these things over the years,
yeah.
To help clients that have these fears. They have the fear of us pulling a hard pull.
Yeah.
They have the fear of getting put on a list and getting a whole bunch of phone calls. The other part that we do is we help them. We tell them how to opt out of credit offers. Okay. And so this is big. So when you have a soft credit report done, no one knows that the credit was pulled. What I mean by that is other creditors, right?
Right.
And before we pull a hard pull, when we pull the soft pull, we'll say, okay, here, log in to opt out, and you're going to opt out of credit offers, and it takes them off those lists so that those trigger leads can't go out.
Okay, so if they do the soft
pull and then opt out,
and then they got out,
and then we wait a few days, maybe 3 to 4 or 5 days or something like that, and to pull the hard pull so that they're not put on the trigger leads.
Okay.
So it helps them, so they don't get inundated with phone calls.
Okay, cool. So we could say free credit advice and consultation, right? I'm just trying to make sure.
He's already got the moves down. This is what I'm going to do.
That's exactly what I'm going to do in the video. Free credit advice and consultation. And then at the end of the video, I'll be like,
all the lawyer jargon, yeah.
But I should be good because I'm not.
Conditions apply.
But I should be good because I'm not a mortgage person. I could say that stuff, right? Or is that a thing? I just want to be,
Just be as cool as you can.
Yeah.
What I mean by that is don't try and get people interested in something that's not going to happen.
Right.
It's always the easiest to try and market that way, where you're like making things sound super cool.
Yeah.
But at some point, when they know the real story, they're going to be like, oh, here we go again. It's all sales and marketing.
I mean, to me, it
sometimes people need it.
Yeah.
Sometimes people need it.
Yeah.
I make a joke sometimes that if let's say I lose a loan or I have a lead on the line and they don't like what I'm telling them, but I'm telling them the truth.
Yeah.
And they're like, okay, yeah, someone told me I can get better, and they hang up on me, right?
Right.
I'll tell my coworkers, well, that person needed to be lied to.
Right.
Like,
yeah.
No sweat off my back. I'm not going to do it.
Exactly. Yeah.
So if they want to be bait and switched or lied to,
right,
go do it with somebody else.
Yeah.
And then I always tell them, well, hey, that sounds great, whatever they told you could get, but here's my contact information, and if it falls apart or it doesn't end up being like what you thought, call me, and I can help you with legitimate real numbers.
Yeah.
Sometimes people never call back because they're embarrassed.
Yeah, exactly. Yeah.
But I have had a few that are like super duper. They're super, I guess they just have integrity in themselves, and they're like, hey man, I didn't know they were lying to me. You were honest with me up front.
Yeah.
And I've had that, and it's the best feeling ever.
Yeah. No, absolutely.
Because you're like, this is awesome. Like, I have your back now.
Yeah.
Like at that point, they're a real client, and they're like,
And it's like a genuine, like a great job. Like it's genuine, just there for them. Like, you know what I mean?
Yeah. You have my back. You didn't lie to me, so I'm calling you back. Let's do it. Yeah, and that's the best sale ever.
No, absolutely. On average, with your clients that you help with the free credit advice, what is like the average points that it goes up?
It goes up. It's a lot. So let's say I've had clients where it was like in the 500s, high fives, and it ended up in the low sevens.
Oh, wow.
That much.
Wow.
So it has the opportunity to go up a lot.
And how long did that take?
A couple months.
Okay. Wow.
So it always takes a couple months because you have to wait for the credit repair or credit to re-report. And it does it every 30 days, but it depends on what day of the week. So I always tell people it takes about 45 days. Because you could have people that do it every day or every month on the 1st, and people that do it every month on the 30th. And if we talk on the 15th, then we're going to have to wait till the 30th of the following month.
Right.
For it to, you know what I'm saying?
Yeah.
So it just depends on when they report, but 2 months is safe. But that's how long it takes if they make something a correction.
Okay.
So the big things that we see that help the most is if they have like collections, small collections, and then they get those removed or deleted entirely. Not paid, because you don't just pay them. You pay them, but in exchange for a deletion letter.
Yeah, I remember that.
And then that way it comes off and it acts like it was never there, versus it saying, okay, there was a collection and now it's paid, which helps your credit by maybe 10 points. But if you get it deleted, it could be 100.
Oh, wow.
And
10 times.
The other part is people that have overextended on their credit cards. And it doesn't matter how much the credit limit is. It's a percentage of credit used versus the versus the amount of credit that you have available.
What's the percentage?
So you want to stay under 30%.
Under.
So what I'm trying to tell you is, like, let's say you have a couple of.
So you have 10,000 credit limit. You want to stay under 30.
You want to stay under $300.
Wait, you hit 10,000.
Or under $3,000.
Yeah, $3,000.
Yeah.
Okay.
So,
okay. That's good information.
Yeah.
You want to stay under 30%.
But what happens is a lot of people don't realize is that it may not even be that big of a deal, right? Let's say for someone who has a $10,000 credit limit and they're at like 9,000, it's a big deal to get to 3,000. They got to pay $6,000, right?
Yeah.
But let's say someone who has a $1,000 credit limit,
right,
and they're at 900,
right,
and they need to get to 300. That's only $600.
Yeah.
Or let's say they have a $100 credit limit. So what happens to a lot of people is they have these small store credit cards.
Yeah.
With these low limits, like, oh, hey, save 25% on your purchase today at Kohl's or at, wherever they're shopping.
Yeah.
If you open up a credit card,
right?
Well, that's only going to have a $200 limit.
Yeah.
So if they're spending $200, they automatically show on their credit report that they have a maxed out credit card.
Oh, wow.
And so it might only take $200 to boost your score 50, 60 points for something like that. So,
or having a lot of the little credit cards, does that help your credit score too? You know what I mean? Like
having a lot of little ones?
Yeah. Like if you just have a lot of them?
It just depends. It depends on utilization and length of credit. So keeping your utilization low, your percentage of
under 30?
Under 30.
Under 30.
And then keeping credit cards for a long period of time. So a lot of people don't understand that when they're cleaning up their credit. Let's say someone's been in debt for years, right? And they go, oh, I got a whole bunch of money and I'm going to get my credit fixed. I'm going to pay off my credit cards. Cool. Don't close them.
Right.
A lot of people pay them off and close them.
Oh, wow.
And then you lose all that credit history. And so you might think that your credit score is going to go up a whole bunch. So it might be the difference of someone like that. Let's say they have a 600 credit score and they're in debt heavily. They get a whole bunch of money for whatever, and they pay off all their debt to zero, or even leave a couple $100 on each card. They might go from 600 to 750, right? But that same person that pays off all their credit cards and closes those credit cards might go from 600 to 650.
Oh, wow. Yeah.
So it could be a huge difference.
Yeah.
So it's important for people that even if they are in a situation where they're paying or fixing credit, we can help them kind of say, hey, don't close the accounts.
Right.
I've had people that have done that, and I'm like, oh, why'd you close it? I didn't want to use it. Well, what you do is you pay the cards off and you cut them up. Yeah. But you leave the account open. Yeah. That way you keep your credit history.
Yeah, definitely. I've definitely done that.
And the other tip for that is, and put that card, even when it has a zero balance, on auto pay, because sometimes cards charge like $10 a year.
Oh yeah.
And so like people think their debts are paid off, right? And then they let the $10 charge comes on, and they're not paying attention to the card anymore because they think they're out of debt, and then now they have a 30-day late.
Right.
So you got to watch out for that too.
Do you have any apps that you recommend for people?
I don't use any credit apps.
You don't do it? 'Cause you just
There are apps out there. I heard Rocket Money's pretty cool.
Okay.
People use the credit, all sorts of different credit apps. Trying to think of the most popular one we always hear about.
Karma?
Credit Karma.
Yeah, Karma. Karma, right? That's
Credit Karma.
Yeah, absolutely. Yeah.
Or what's the other one? Equifax or they have Equifax. Experian app, right? Yeah. So they all have the apps. Yeah. Those are cool to track your credit. They're not accurate.
Right.
So a lot of people will say, well, my credit's 750.
Yeah.
I'm looking at the app. It says it's 750. Well, there's 3 credit scores, 3 different bureaus. Yeah. So what one are you looking at? Right? Because one might be 750 and one might be 650. Yeah. So when you're qualifying for a loan, we look at all 3 and then we take the middle one. So sometimes people are upset when we pull credit and we're like, well, it's a 650. And they're like, well, it says 750 on my phone.
Wow, yeah.
So that's one problem. And then the other issue is that if people have, a credit card that or credit score that is on those credit apps, it may not be a mortgage credit score. Usually it's a consumer credit card score.
That's right. There's a difference.
Right.
For sure.
Mortgage credit scores from the 3 bureaus are different FICO scores than if you're buying a car or if you're using a credit card.
Yeah.
And sometimes they're lower, and sometimes surprisingly, I've had a couple instances where Credit Karma app said they had a 650, and then when I pulled it, it was a 720. So it works both ways, but those are more. The apps are more to track your credit from month to month, to track if it's going in the right direction, but not necessarily the score itself.
Right. So I recently looked at my Wells Fargo app, and it had a credit thing on there. Are those accurate too?
That's going to be the same thing. It's going to be an estimate of your credit score.
Right. Okay.
Right. It's going to be a consumer credit score.
Okay. Cool.
I'm not sure. I have Wells Fargo too. I'm not sure which one they use. Whether it's Experian, TransUnion, or Equifax, but it's one of them. But again, that's only 1 out of the 3 when you're looking at a mortgage. So the best way to know what your mortgage credit score is to call me and have us do that soft pull.
Absolutely. And I know we got to get going soon.
Man, did I talk that whole time?
But I wanted to know if you had any insight on business credit. Do you know anything about business credit, building that up too as well? Like
LLC type credit?
Yeah, and then for our investors out, because I have a lot of people that are looking to invest.
Right. I think what would be smart for us is to have somebody on for commercial loans.
Okay.
That works in that field, because I'm not sure exactly how that works.
Well, can you get business credit to buy like a single family home, right? Because then use that as.
No.
You can't?
No, you're talking about a business loan, right? So when it comes to business credit, let's say where the business credit and real estate comes into focus or comes together is commercial real estate. Apartment buildings, office buildings, stuff like that, where you open up a real estate company as an LLC, and then you go get a business loan to run your company, and then that money is used to buy properties. That's how you would do that. But you can get an EIN number for an LLC and build up business credit where it's not personal credit. But most business loans, at least the first ones that you're going to get, are going to be still leaning on your credit score.
Oh, really?
At some point when your business gets established, you can get credit lines just based off your business income.
Okay.
So there's different ways to do that. I'm not a specialist in that.
Okay.
More residential.
Yeah.
But it would be good to have a commercial guy come on.
Do you know anybody?
I have a couple of people that I have in my Rolodex that may be able to come on and talk on the show, possibly.
Or I'll invite them or whatever. But
yeah,
that'd be great.
Yeah, because I know you have some investor people that are kind of looking at maybe going that direction.
Yeah.
They're trying to start like a group LLC and then buy properties.
Yeah.
So that would be interesting to talk to somebody who's either done that or someone who handles those type of loans.
Yeah. So. Absolutely.
But yeah.
Sweet. What was that movie again?
Before we go. Too Big to Fail.
Too Big to Fail.
Yep.
Too Big to Fail. All right. Vegaslife Radio.